As we look to the year ahead, Herbert Smith Freehill's partners Karen Anderson, Fiona Smedley and Luke Hastings join us to discuss developments in financial services regulation from 2016 and what we can expect from 2017. Thank you all for joining us.
Thanks, Karen.
Thank you.
Fiona, reflecting on the past 12 months, what have been the most significant developments in financial services regulation in Australia?
Well, for me, when I think back over the last 12 months, I think there are three real factors that have stood out for me, and pleasingly we predicted them in our insights last year. The first is ASIC has had a really strong and continuing emphasis this year on good culture. And we've seen that really now start to have an impact in the way that organisations are hiring, firing, remunerating and training. The second factor for me is the increasing use and emphasis on behavioural economics. We've seen that this year in particular in relation to add-on financial products like insurance. And the third factor for me is there's been a lot of focus this year on remediation programs, and that's now underscored and underlined by ASIC's new guidance on the expectations of the regulator in relation to those programs.
Luke, you're predicting that ASIC could secure greater enforcement powers. What's behind that prediction and what types of powers are we talking about?
ASIC's been seeking greater enforcement powers for a long time now. The Murray inquiry back in 2014 anticipated a review of their enforcement powers, and then earlier this year before the election the federal government agreed to look into their enforcement powers, really to head off a potential royal commission into the financial services sector. They have recently announced a task force which is going to look into ASIC's enforcement powers and report back next year. We're anticipating a focus around penalties, possibly not as significant as we see in overseas jurisdictions, increased information gathering powers, perhaps in the context of breach reporting and also in search warrant powers.
What other trends can we expect to see in the Australian market?
I think next year we're certainly going to see the new product intervention power. And it's going to be really important to examine the framework of that power because it's going to be critical to strike the right balance between balancing consumer needs on the one hand and balancing the need for business certainty and not stifling innovation on the other. And I think next year we're going to see a lot more enforcement action as well in relation to responsible lending laws.
Kat, I think we're going to see a greater focus on competition by both the competition regulator, the ACCC, and also by ASIC. The parliamentary inquiry interviewing the four major banks had a focus on competition, looking at account portability and barriers to entry that small participants face. We've seen recently the ACCC focusing on some cartel or alleged cartel infringement action. And we've also seen an interesting application by three of the major banks to collectively negotiate with digital wallet providers. We're also going to see a continued focus on culture. 1 in 3 speeches by ASIC commissioners this year focused on culture. We haven't heard the last of that topic. The regulators see poor culture as a portent for potential misconduct. And so that's going to be an area of focus again through 2017.
Karen, you're based in London.
Yep.
Looking ahead, what will be the key trends globally in financial services regulation?
Well, in 2017, we'll see, I think, a lot of the same themes that we've already touched on. We do expect to see financial regulators investing in developing new technologies for themselves to analyse and respond to the data they're getting, but also to detect misconduct. And, of course, they're still treading a very careful path between consumer protection and innovation in relation to financial disruptors. Financial crime and market abuse are always hot topics. But this year, I think we'll see regulators focusing on the need to embed best practices in relation to cyber risk, which is well up the agenda, both for themselves in their supervisory framework, but also for firms in their own policies. As Fiona said, conduct, risk and culture, very, very high up there, but competition powers and behavioural economics, I think we'll see a lot more use of. Perhaps some enforcement action coming out of the senior managers regimes in the UK and in Hong Kong. And I think finally, just as a sort of a wrap-up, we'll see more tweaking of prudential and resolution powers. And although global cooperation is still very, very high amongst regulators. I think the uncertainties in Europe politically and with the Trump presidency are going to create some real challenges for regulators in terms of harmonising regulation going forward, but also in terms of cooperating. And of course, for our clients and the markets themselves, that uncertainty is a big risk.
Thank you for your time today.
Thank you.